Welcome back, folks. Happy Tuesday. So I had a good question that came in from, I think it was Roman. I'm going to read it here. And it is a comment under the video where Ganja puts up MMSEP, which would be Michael Martin Show, episode 12, The Biggest Misconception About Trading. I think we got to work on that title for our Wednesday shows, but who knows? Good video again. Maybe you could talk about setting goals again, what qualifies as a good goal in trading, if not a financial one, how you managed to set goals for yourself when you started out, and how they might have changed over time. Thanks in advance. So there's a couple questions in here. So I always knew that I needed a process. I was obviously in a very different financial situation when I started, and I didn't know anything. I didn't know anything really about the business in many ways. I knew I had great instincts as a trader, and those instincts served me well. What I needed to do was to find the process. So although I know I needed to have more more net income from the wins, i.e. more credits, quantity of credits, than losses, right? Net income. I didn't know what that was going to look like. At first, I thought it was an accuracy game. Then since I was a bit of a math whiz, I understood expected values and Bayes' theorem. So I was like, oh, that makes much better sense. That takes the pressure off me of not needing to be right. And then you can use Kelly criteria to figure out all the stuff that you need to do to hit your goals. It's a little bit too much to do without being able to diagram it and illustrate it. That's the way I say diagram in Michael Martin sign language. It could also mean when there's a crazy driver on the streets of LA. So my goals weren't necessarily about making the money, because I knew, like, if I made money on a trade, I'd be like, well, great, but how the hell did I get here? So I didn't want to feel that feeling. So I knew I had to focus on the process. That's just probably dumbass luck, right? I knew that I had to focus on the process. I also knew how to manipulate data. My nose was always modeling stuff. I'd look at the box scores of baseball games and look and see, like, if Ron Guidry went deep into a game, like, what was the likelihood of the Yankees winning? So in the probability Bayes' theorem, right? What's the probability if Guidry went 7 innings, or if Guidry had X amount of strikeouts, what was the outcome of the game, win or lose? So I'd look at things like that. Now, these days you can go to different gambling sites and bet on the outcome of everything. That I wasn't betting, but I wanted to understand the math. I also looked at, like, humidity levels and temperatures of New York City in, like, the month of August to see if it had any predictive value in having a longer summer that would go into the, September, October. I don't think I could draw any conclusions, but I used to look at the data like that to see if there was stuff. It's like a crossword puzzle, because the data's right under your nose. Everyone could see the data. So I would get that data and put it together in spreadsheets and just try to come up with macros to see if it would show me anything. Just as a test to myself. I didn't actually care if the summer went long. I actually liked the fall in New York much better than almost any other deal. So it wasn't like I had an interest in the outcome. Like, I didn't care. I just wanted to see if there was any way to look at the data. So the goal for me was to find, and I didn't say it as articulately then, but I needed to know, like, a process. Like, what's my trading model? What is it that I'm going to do every day? I was quick to get into it, almost impulsively, but then I was also impulsive in cutting and being decisive, like a good trader should be. I cut away interbank foreign exchange. I let go of options. I even put equity trading on the side because I had to focus on where I had skill, which at the beginning you don't even really know, but you do have some evidence. You got a hunch, you have to go with it. So that's what I would focus on today if I could talk to my younger self, is to focus on the process more on the outcome. Because too many people get emotionally invested in the outcome of something and they don't really have the process down, and then they get all mad or angry or frustrated or despondent. It doesn't matter what the feeling is, but intentions equal results. So I would, in order to understand that, go back in your life and see where you're winging it, or maybe you're acting impulsively, or maybe you have unrealistic expectations where you think you're putting in a lot of work. Remember, because thinking is actually procrastination. Maybe you're actually procrastinating by thinking too much doing not enough work on the modeling, putting trades on, getting angry at the results, and then bitching and belly aching to everybody. That's a fucked up emotional model, right? But you see it all the time. Like people they buy into the marketing hype of various things, right? I also didn't look at the pros that I had access to and resent them, nor did I admire them, because I had a very sober way of looking at the fact that they had experience and they developed a model with which they were compatible. And they were able to execute that over and over and over again, because I knew there wasn't any stock picking gurus. It was never about hot tips. They didn't exist. Hot tips exist in the mind of the unsophisticated, right? And I would never let anyone rent my brain that way. My brain is too good. So I would think like, okay, well, what did they have to do to get where they were? How did they think about the markets, right? Were they in the right place at the right time? Like the folks who made their first investments in technology in the mid-90s and for 5 years think that they were like hotshots, when in reality, when the tide goes up, all the boats go too. Again, no dig on them, but you need to know what your model is. If you started trading from 68 to 70 like Victor did, it was a bear market. So if you didn't know how to short sell, it was a hard place to try to make money on the long side. You could interpret that you're an idiot if you're looking at the results of buying long in a bear market. Might be something that we have to think about now, right? Given the environment that we're in. Now, I did need the money. That was the point. That was the end goal. But I didn't say like, oh, I need to make money right now. What I need to do is I need to find a process that works for me. How do I ideate, right? My trades. Is it from reading the newspaper? Is it, because financial TV didn't really exist at the time. It was kind of just starting, but it was still at a very nascent stage. Like it wasn't what you see today. So it was, and I don't find it, for me as a human being, I don't find it particularly useful. I don't care to see Paul Tudor Jones, interviewed about stuff. Interesting guy, but it doesn't help me trade better, right? Good human being. Robinhood's given away over $2 billion, but that's not, again, any information that I could use to help me be a better trader, right? It can help me certainly have a role as a role model for humanitarian stuff. And I have a lot of nonprofits that I'm involved in one that's very important to me. I'll talk about another time. It involves, kids who live in the favelas in parts of Rio de Janeiro that we sponsor and train and bring to America, that just competed in the World Championship. They do very well, but they train 8 hours a day. So you get out of it what you put in. And so my goals actually didn't change over time. That was the second part of it, or the third part of it. There's a few moving parts to Roman's question, because the goal is always to try to stick to your process. The amount of net worth changes and the market environment changes, but the thing that you should focus on all the time is your process, because the markets are going to change, right? They're going to morph because they respond to the economy, not just the American economy, but they'll change the global economy. Interest rates have a lot to do with how stocks perform. Interest rates also affect the US dollar. Higher interest rates tend to support, in a bullish way, the dollar. Not all the time, because there's lots of factors. So what happens if the dollar goes up compared to what happens with foreign investment, for example? So you need to know all these things and be mindful, because what worked in 21 didn't necessarily work in 22. See? And that's particularly harder for the shorter term traders, because the shorter term models can get out of whack a lot sooner than the longer term models. If I'm testing things over 10 or 20 years, those models don't just all of a sudden not work. But if I'm trading 1 minute bars, it literally might not work next week, right? And so that's the choice that you make deliberately, to fulfill your financial and emotional needs, right? If you're doing it that way. And I'm sure if you ask, or if even I asked my friends who are in the shorter term space, they've had to evolve, and they have to evolve quickly, because like I said, the markets are going to change, and what works in the shorter term space, one period of time, they can change very, very quickly. But I think one of the benefits of longer term, holding periods, I suspect, is probably the best way to call it. I have found in backtesting models, again, not predictive, but what I have found is that if you ran data on 60 different commodities or 1,000 certain capitalized stocks, and you modeled that, they don't work up to a certain point and then they don't work anymore, right? They do ebb and flow, and you can certainly isolate periods of time within that backtest and see that there were certain losing periods that if you had isolated them by themselves, you'd be like, well, this system doesn't make money. But when you back it out and you look over a longer period of time, right? So to give you an example, you might run a trading strategy that worked for the last 20 years, going back to 2003. But in 2017, it lost money. So if you look at some of the shorter term simulators, right, where they only let you test one idea, you might come to the wrong conclusion, right? Because you're only looking at a smaller data set. Now, a year, I guess, to some people, if you're looking at 1 minute bars, a year's worth of data could be a lot of data points. But if you're running something that's a little bit more robust, that's going to work across more than just, say, the Russell 2K, the E-mini, and the NQs, and you're more promiscuous in that you have metals, you have the grains, you have the softs, you might have interest rates, you might have currency, you might have large cap growth, up to 500, whatever the number might be, and how you segregate capitalization, right? You might have a model that just looks at index components. And so you want to be objective and look at that data. So I also looked at longer term data, right? Which saved me a lot of the duress of having to figure out and what I would say reinvent myself every day. That to me was exhausting. I didn't want to have to come in every day and think like, what am I going to do? I wanted to know exactly what I was going to do, although the instrument might change. A lot of people come to the market, again, especially the short-term folks who look at, and this is probably some trading advice too. If you're struggling and you're trying to day trade or, look at short-term time frames on just the indices, those indices are strongly correlated. Admittedly, you can look at spreads between NASDAQ and S&P for sure and see some differences, especially in this environment. But this is a unique circumstance. Most of the time, those markets are highly correlated. And if one goes up, they kind of all go up. So if you don't see something in the E-mini, I think I'll debate you on it, but you might be forcing trades, right, was the point. And I didn't want to come in and have to force myself into trades because I had a financial goal. I wanted to have a process goal where I knew what the process was going to be every day. It might be a different vehicle to help me get there, right? So that was something that I was lucky to strike upon early, and then that's carried forward over the years. So that really doesn't change. I think when you have a financial goal, your goals will tend to change more frequently. But if your goal is to have a process that's going to pay you handsomely over periods of time, then I think, you'll have to do less work, and it's more about editing the model and making smaller adjustments than having to come up with a whole other model, right? Again, maybe I was lucky to fall into it that way. Again, I was physically trained, so I kind of understood how the hedging business works, where most commodity traders are straight out just speculators. So I did maybe have a bit of an edge. And then I later kind of came to understanding, speaking about edge, that if you don't have an edge and there isn't a vehicle for you to express that edge, given your trading style on any particular day, then you got to take the day off. Go take a blanket and a radio and the newspaper and a cup of coffee and do the crossword puzzle in the Great Lawn, or go walk through a museum, or go do something else, as opposed to trying to reinvent something right on the fly, especially if you're newer, because you don't have the right instincts to kind of do that. And you could be looking to fulfill an emotional need for that particular day more than a financial one. It's okay to miss a day. It's okay to take a day off. But anyway, there's all different shapes and sizes. You might feel differently. As always, I appreciate the feedback, any rebuttals or, comments or disagreements. It's all good because it helps move the conversation forward. And, everything has to be in context. It's hard to do that in such a short window of time here. But please consider liking and subscribing. Send all your comments over. I see them. I'll be here tomorrow with Ganja, and I look forward to seeing you then. Take care. Okay, everybody, thanks for being here. Please take a minute, like and subscribe to the show. You could also leave a comment. I don't have all the answers, so it's good to get some feedback. Also, if you would like to support the show, check out the links below. You can get the free audiobook of The Inner Voice of Trading, and also information about the course that I teach with Victor Sperandio. Thanks for being here, folks. I'll see you tomorrow.